Hi everyone, and welcome to this video on the super portfolio rotation, which happens to be up for the year. It's March the 10th. As of March the 10th, the super portfolio rotation is up 4.22%, and this is while the S&P 500 is dropping over 10%. The NASDAQ has dropped over 13%, and the Russell 2000 is down a whopping 18%. And despite the markets tumbling, the super portfolio rotation continues to rack up profits. But not only that, not only is the SPR up 4.22% while all of the stock indexes are tumbling, the SPR has an astonishing 97.7% closed trade win rate over the last 18 months, 130 closed trades with 127 winners. These are actual fills, not hypothetical. And so far in 2025, despite the markets tumbling, we have 17 winners and no closed out losses so far this year. Here is a look at IWM to give you an idea. We're trading at a high of 245. We actually dropped below 200 in IWM. The market is down more than 18%, and there's a lot of uncertainty in the marketplace, in stocks. And so what is the super portfolio rotation? Well, it is a very powerful intermediate term approach to consistent, long-term, above average returns. In a nutshell, that is what the super portfolio rotation is. And as great as that is, the best news is that you don't have to learn anything to be able to immediately have these trades working for you. And as you're about to see, the super portfolio rotation approach has consistently outperformed the major stock indexes. And while stocks have been making significant drops, the SPR continues to crank out solid returns. Here are the 17 trades that we have closed out so far in 2025. You can see here the entry dates, the exit dates, starting off on the closing. This is in chronological order. And you'll notice here that the biggest drop in stocks, are coming during the last part of February and the first part of March. That's the biggest drop that we have seen. And yet, look at this, 224, 225. Most of the trades have been closed since 224. While stocks are dropping, we are closing out profits. These are targets that have been hit. These are not stop losses. We actually don't use stop losses. These are targets that have been hit. So these stocks have surged to their targets while the indexes have been dropping. This is how the super portfolio rotation approach works. You might be saying, okay, well, that's closed trades. What about the open positions? Well, we actually have 57 total open positions as of the time of this recording. So we've closed out 17. We have 57 total open, and if you would have gotten into those stocks on December 31st at the close, you would be up net $463. So not only do we have closed out trades of over $1,700, we also have an open P&L since January 2nd of $463. While stocks are down for the year, our open position total net profit is $463. Now, of course, we have stocks that are also dropping, but that's the beautiful piece to this puzzle. We are well diversified, and the strength of our portfolio and the timing of our trades is what produces returns while stock indexes are dropping. In fact, I could not find a diversified stock fund that has outperformed SPR so far in 2025. There may be one out there. I was looking on hedge funds, mutual funds. I cannot find a normal diversified stock fund that has outperformed SPR so far in 2025. But that's only part of the story. While the SPR officially is up 4.22%, and that includes my closed trades, my open positions, and some dividends that we've collected. Now, I've not recorded any dividends that we've received so far in March, so we're actually up a little bit more than that because we have received some dividends in March, but I only include those once a month at the end of the month. Nevertheless, my account is actually up $4,213 for a total return of 7.27%. And I'm going to get to why that is here in just a few minutes. But before that, I want to remind you that we've done all the work for you. All you have to do, if you want to have these trades working for you, all you have to do is enter a few orders once per week and let the power of the SPR approach do the rest. That's all. It is super simple. Here's an example of the signals that are working this week based on a $58,000 account. And the reason that this is based on a $58,000 account is because we started with $50,000 at the beginning of January 2024 just to keep an official track record. And we're actually a little bit more, the official track record, we're actually a little bit over $58,000. So what we do is we allocate 1.5% of our account value to each signal. So if that ever changes, you'll see that this is a copy of the exact signals that you'll receive. So if you can follow this, it's buy SU 25 shares at 35.20 on a limit. The current price is 35.75 at the time of this screenshot. And we're going to allocate 1.5% of our $58,000 account. And then once that is filled, we're going to place a target at $39. All of that is preset for you. You don't have any guesswork. There's nothing for you to, this is super simple to trade. My daughter is the one who places these trades in the account. So anybody can do this. That's not to knock on my daughter. But she's not an expert trader. She's learning, but she's not an expert trader. She does this for us every week. So, nevertheless, super simple to follow, easy instructions. If you want to know, if you have a different size account, you simply go through the math. Our account is 58,000. You multiply it times 0.015. That comes out to $870 of my account that I'm going to be allocating to SU, and $870 divided by the limit order is 35.20 equals 24.7. So we round up to 25 shares, and that's how you come up with that. Okay, so super simple, no guesswork, really easy. And I showed you SU for a reason. Okay, so SU here is the first stock in the list for this week's new trade signals. But I want you to notice that SU is the first closed trade we had in 2025. We closed it on 113. We had entered at 36 and exited at 40.50 for about a 12.5% return. And now we are looking to enter SU again. Why is that? Well, there are three main secrets to the super portfolio performance. Three main secrets, and I'm going to tell you what they are right now. Number one, we start with a highly diversified group of rock-solid, proven, long-time consistent stocks. Not fly-by-night speculations, for example, like startup pharmaceuticals. We do not invest in stocks that are new. We do not invest in stocks that have the potential to be fly-by-night. We do not invest in risky, unproven stocks. We invest in long-term, as in more than 25 years. The stock has to have been proven to be consistently outperforming the overall index for more than 25 years. We have certain standards, certain criteria that stocks must meet to reach our portfolio. to be in our portfolio. And so we have collected those and gathered those together so that we start with a solid foundation by only trading long-time, proven, consistent, high-performing stocks. That's the first secret. That's the beginning. This is where we separate ourselves from most stock indexes, most stock performance funds, most mutual funds, because we only invest in the most proven stocks. That's it. Take for example, SU. Okay, you saw SU. We closed out one trade already. We're trying to get back in. And that particular stock, going all the way back to 1994, year over year, has seen a profit 77% of the time. Now, oddly enough, 2024 was a great year for stocks in general. And oddly enough, SU, not SU, I'm sorry, I'm thinking of another stock. SUI was down in 2024. I'll get to SUI in a minute. Nevertheless, 77% of the time since 1994, year over year, SU has finished at a higher price than it started with at that year. And the average annualized return has been, since 1994, has been 18.86%. That is tremendous. This is a high-performing stock. And so this is in our list. And so we will invest in this stock when our entry criteria is met for these stocks. So we have a list. It's now over 250 stocks in our super portfolio rotation, all having to meet these similar requirements for long-term performance and consistency. And that's just one in the group. Here's another. Here's ADP. And again, we have 250. I'm not going to go over all 250, obviously. I'm just going to give you a couple here to show you the standards. Here's ADP. And since 1984, ADP has finished higher year over year 85% of the time by a whopping 16.58%. And if you would have put $10,000 into ADP as of January 1st, 2000, that $10,000 would have grown to $97,469. Compare that to the S&P, which is a fraction of that. So if you would have just invested in the S&P, you would have a fraction of that. I think something around like 57,000. So almost half is what you would have of what a same investment in ADP made at the same time would have yielded by being in that stock. And this stock is up 85% of the time. 85% of the time. So that just gives you an idea of the quality stocks that we begin with. Okay, so the importance of that I cannot emphasize enough, because that's half the battle. Okay, that's secret number one. Secret number two is we use a proprietary timing strategy, and we look to enter the stocks at what I call prime performance levels, which also then increases the efficiency of the performance of SPR. Okay, so we're looking for prime performance. I call them, so there are four things that I look for, four main things that I look for in a stock. And if all four of those exist, the stock is green. Okay, and if any one of those does not exist or ceases to exist, then the stock turns blue. And so if a stock turns green, it gets posted on here. And so what happened is we got out of a stock because it hit our target, and then it turned green again. And so we put the signal back in. We have a limit order. We have a specific criteria by which we use to determine where we get in and where we get out. And as long as the stock is green, we'll remain in it until it hits our target, even if the stock is moving down. So like I said, we do have some stocks that are moving down during this massive pillaging of the stock indexes over the last couple of 3 weeks. And we do have some stocks that are kind of following suit and moving down. But overall, net, our portfolio of open positions is still up for the year, almost $500. And so this is something that can be attributed to our timing of when we get into the stocks. And this is really, really powerful approach because, and it's proven to be powerful because we have a 97.7% closed trade win rate. 97.7% closed trade win rate. Going back over 130 trades, going back to, I believe it was September of 2023. And so what you'll see here are some closed trade stocks, or some, for example, here's SU again, entered in December of 2023, closed in February of 2024, another 11.29% gain on this. Here's a couple of others that we're showing, so you can see we have Yum is in our is in our portfolio, IEX is in our portfolio. We have over 250 stocks that we're watching and waiting for them to turn green. But as you can see here, here's one of the losses, and it was a small loss at only 1.67%. So it was a small loss. I think our largest loss is only 9.9%, and I'll show that here in a minute. Nonetheless, we have a timing mechanism so as to increase the efficiency of our overall trades within this group of portfolio stocks. And that brings up the third secret to the SPR performance, and that is rotation stacking. Rotation stacking, because we are able to be efficient with when we're in the stock and when we're not in the stock, we actually have the ability to increase the overall return by two different means, two different ways. And this is where I'm going to get into SUI. SUI, not SU, SUI, just a coincidence here. And I'm using SUI as an example because SUI was down almost 8% during 2024, and SUI is up almost 80% year over year. So it just so happens that SUI had a down year in 2024. Even though stocks, as a general rule, were up, we had a stock that in our portfolio that did not perform that well with the buy and hold. However, by using our performance peak, by using our performance levels, by waiting to get into a stock until it is in the green mode, all four of my major four criterias are met. We actually got into SU, and this is straight from the brokerage, so that you can see here. This is a screenshot from the brokerage looking for all SUI trades going back however far. And you can see in 2024, we entered the trade at 112.50 on September 4th. So this one took a little bit longer to hit our target, but it was also a larger target at 136 for a significant gain. And then again, just a month later on October 8th, we buy that again because it entered our performance levels. And so we bought it again, 124, hit our target again just a few weeks later. And as a result, we were able to pull out during the year of 2024 $38 per share when the stock was down 8%. We made 34% on a stock that was down 8% because why? Prime performance levels. Prime performance levels. That's why. Now, it doesn't always turn out that way. Sometimes a stock will be down and will also be down for the year in that stock. This is not the holy grail. It doesn't mean that we're going to always pick the winners. We have a couple of stocks that we're holding on to that are down pretty big, but they're still green. there's no reason to exit because they still meet the 4 criteria that are required. And so, we do have that, but I just wanted to show you the power of this because it allows for something additional, and that is intra-year compounding. Rotation stacking allows for intra-year compounding, and if you don't think that that's important, let me show you something, and this is kind of how it works. Okay, now this is a perfect example, and it's not always this way. This is just, again, to work through the mathematics. So what we do, our average hold time is about 3 months in a stock, and our average gain over 130 trades is about 12%. So this is really close to realistic of how we've been able to do it. All right. So nevertheless, we get into a stock. Let's say we get into a stock. We pick a stock and we hold it for 3 months. And during that 3 months, because we're using performance levels, right, we gain 10% on that stock, and we exit. Okay. We go ahead and exit. There's no reason to hang on any longer. The majority of the probable move has happened. We get out, and now we look to replace it with another stock that's at a prime level. So we're rotating out of one stock and into another stock that is in a prime level, and let's say we hold on to it for 3 months and it gains 10%. Do the same thing. We rotate out of that stock into another stock that happens to be in prime performance levels. Hold on to that, make 10%. Okay. October, we do the same, hold on to it, make 10%. Well, if we just hold on to a stock, or if the totality of our stocks are up 40%, and we don't rotate in and out of anything, we have a really unbelievable year of 40% with our portfolio, just buy and hold. Which doesn't happen often. It's not going to happen often. But let's say it happened this year. Well, by rotating in and out, so a $10,000 account would grow to $14,000 at a 40% buy and hold. But because we rotate in and out, we are able to take the profits from stock one, right, and then invest them into stock number two. And so our 10% on stock number two is actually a little bit bigger than the total dollar gain was on stock number one. And then we're able to take those gains and we are able to invest all of those gains into stock number three, and then do the same thing and do that into stock number four. And instead of the account growing from $10,000 to $14,000, it grows into $14,641. You actually add 6.4% to your overall return simply by stacking. Now, I'm going to tell you right now that this also increases your overall potential to achieve stellar returns, even without the intra-year compounding. So you'll recall that we're looking to get into SU, right, at $58,000. That's because I started with 50,000, now we're at 58, so I have 58,000 to invest in 1.5% of 58,000 instead of 1.5% of 50,000 to invest in SU. So I'm actually able to compound and take some profits and invest in the new performing stocks, all because of the powerful approach of rotation stacking combined with the performance levels, entering and exiting based on performance levels, and creating some a spectacular track record. Okay, here's a bunch of the trades in 2024. Here's that one loss of 1.67%. Here's the largest loss we've taken since we started, down 9.82%. Now we do have a couple of stocks that are actually open that are down a little more than that. But again, while they're green, that's fine. Once they turn blue, if they're at losses, then we'll take the loss and we add them. Obviously, here's another loss, only down 1.10%, and that's the last loss that we've had. We've not had another a loss since closing out that loss in August of last year, August of 2024 is the last time we've had a loss. Here are the 17 trades. Again, 17 trades, 17 winners that we've closed out in 2025. And you can see here 12.5%, 15%, 15%, 10, almost 10%, almost 15%, almost 9%. Here's 10%, 14%, 8%, 14% again, 16%, 9%. Right? So we're consistently able to take generally between 8 and 16% on these stocks and rotate. We get out of one, we have $1,736 in closed profits that we are now rotating back into new stocks that we did not have at the beginning of the year. That's pretty powerful. Now, I mentioned here that this was not the whole story. Not the whole story. And the reason it's not the whole story is because while SPR officially, actual fills is up 4.2% as of this recording, my account is up 7.27%. All right, my account is up 7.27%. It's up $4,213. Now, why is that? Well, I'm going to get into why that is in just a second. First, I want to tell you what you're going to get. Because a lot of you are asking, okay, how can I take advantage of the Super Portfolio trade alerts? And so here's what you get. You get a weekly report with exact entry and exit signals. You saw a screenshot of the signals themselves, exactly as they are. So it's super simple to follow. You get weekly commentary in this report. You get a constantly updated, so every week we update the open trades. So you see the actual performance of the actual open trades, and we update the closed trades. So you see the actual fills and an ongoing track record of the closed trades. So that's in every single report every week. Then we give quarterly recap webinars. And so if you're, wanting to know information about, hey, why are we still in this stock, or, maybe we're going into a bit of a drawdown, I'll cover everything and I'll answer all questions in these quarterly recap webinars. And then you get access to the best performing stock portfolio in 2025. As far as I could find, there wasn't another stock portfolio that is outperforming us. And so you can get all this. You can call Spring or Candace, 918-203-7547. If you don't get Spring, it's probably because she's going into labor soon. So depending on when you call and whether she goes into labor. But you can talk to Candace as well, and she'll get you set up. Or you can click on the link below this video. Okay, now let's get to the rest of the story. The rest of the story is the reason that my account is actually up 7.27% return on the year, as opposed to only 4.22%, is because I fully hedge my SPR portfolio against a market crash through the indexes. I hedge my SPR portfolio through the indexes. And because of that, while SPR is up for the year 2025 so far, my hedges are also up because the stock indexes are down and my hedges are making money on top of my SPR making money. I actually have closed out trade profits through my hedging strategy of $1,766, and as of right now, I continue to be hedged, and I actually have an additional open position profit in my hedge of, let me look at it real quick, of over $100 right now. So I actually have a little bit more in open position profits that can be added to this. But if stocks recover, and I do think they are about to recover, then I'm going to start to give back some of this profit. But on the flip side, this should go up, right? So I may give back a little bit of this as stocks recover. Not much, because I only have like $700 of this at risk. So if stocks go up, I'll give back about $700 of that, but I should make it back on the open P&L. So my overall net open P&L should also increase. So hedging is so important because it allows me to always constantly be 100% invested and not worrying about whether the markets crash or not. And as you can see, a combination of SPR during this last 3-month period, combination of SPR and my hedges during a time period when the market is tumbling, we are absolutely killing it. NASDAQ is down 18%, and SPR with the hedges, including all open positions, up 7.27% for the year. And we're not even, March 10th, as of March 10th. So my hedge has made $1,766. That adds to the overall net profit. Hedging is super, super important. In fact, during the pandemic crash of 2020, because of the hedge, while stocks were crashing more than 35%, the worst drawdown in SPR was less than 7%. It won't necessarily completely make up the losses if stocks crash, depending on how you implement the hedge. You can make it to where it will more than make up for the loss, and I talk about that. But in this case, the markets are crashing 35%. The worst drawdown during that crash in SPR was only 7% because of the hedge. SPR itself was down about 30%. So without the hedge, SPR was still down. It wasn't as down as much as some of the indexes, but it was down. But because of the hedge, it was only down, maximum was 7%. So I tell everybody, if you're going to be involved in stocks, hedge. Hedge, hedge, hedge. Even if it's not SPR, you want to hedge. But with SPR, what I'm going to do is I'm going to give you a bonus, because you will not find very good information about hedging out there on the interwebs. In fact, you'll find a lot of misinformation. And so I have created a video, and I have follow-up videos. And you're going to get the hedging package included in your SPR package at no extra cost. It's valued at $4.97. Quite frankly, when you're talking about the fact that stocks crashed, and instead of my account crashing 35%, my account only goes down 7%. That's a savings of 28%. And if you have a $100,000 account, that's a $28,000 savings. $28,000 savings. So the value, really, I mean, it's limitless for more reasons than one. It gives you peace of mind so that you're not worried about a stock market crash. It allows you to always be fully invested. You don't have to say, oh, should I get out? Should I go to cash? Should I move to cash? You don't have to move to cash. You don't have to be right or wrong about whether stocks move up or down. You can always be involved because you are fully hedged and protected against a crash. So in this package, I have an exhaustive video on hedging. And it is a one-of-a-kind video. You won't find anything else like it. I talk about why we use what we use and what the industry talks about as hedging, which actually isn't hedging. And then I have a live hedging webinar every first Thursday of the month. So you can see exactly how I'm hedging. You can see my exact position. I'm going to tell you exactly what I'm going to do to continue hedging, and you can follow along if you want. And so that's held every first Thursday of the month. and you will have access to that for as long as you are an SPR subscriber. Okay, now this is for a limited time. We're giving you a 50% discount, and we're including as a bonus the hedging package for a limited time. You can get 1 year of the alerts and the reports and the webinars and the hedging bonus packages and the live trading webinars for the hedging, all for $9.97. The best performing stock letter you will find for 2025 is less than $1,000 for the year. Okay, that's less than $97 a month if you want to do the math. It's less than $97 a month. All right, so you'll get that for $97 if you want, and you should. You absolutely should. If you're going to do this, you should commit. You should commit for the rest of your life, quite frankly. $1,497 for 2 years, so you're getting another half price off the second year. Basically, is how that works by going ahead and subscribing for 2 years. So call Spring or click on the link. Call Spring or Candace, 918-203-7547, or click on the link below and secure your spot. This is not going to stick around. We're doing this as a special because stocks are tumbling, and we think you should know that there's an alternative out there, and it's a strong performing alternative. All right, I hope to see you on the next webinar, and especially the next live hedging webinar.